Hi, this is Joseph. It is Thursday, May 14th, 2015. We're going to talk about a few trades that we executed with the trade copier and also my expectations leading into Friday trading sessions for the London and New York. So, first of all, we're going to start off with the dollar yen. The reason I want to start off with the dollar yen is to, first of all, be aware or draw to your attention some of the price action that we've witnessed over the past 24 hours. We're looking at the possibility, and I'll go ahead and bring an arrow or maybe an X right here. This support level was previously, it was this week's low, and it looked like it was going to create a pretty good bounce. But I keep going back to, for example, the daily chart with my subscribers. The daily chart, if we look at the daily chart, you can see just how much consolidation is there. And until it breaks out of that consolidation, I personally can't really expect price to trend where I could pick up maybe 55 pips on a continuation breakout trade. So that's one of the trades that I execute. It's a 55 pip target, 55 pip stop placement, and it is called the continuation breakout trade. But in order to do that, we have to have an appropriate range of consolidation. It cannot be too small. If the consolidation range is too small, generally it will lead to a head fake, and that would be a failed trade. So we don't want to see or trade a break out of a very tight range of consolidation. Now, today, again, we were looking at the possibility of this creating a bounce, and it ended up creating a bounce. It just came back down one more time to test this. Now, this actually was what I call a Tech 1 trade. A Tech 1 trade is a bounce off of support or resistance. It has to be significant support or resistance, and it is in most cases it's a pretty good move. I mean, in this case, even with the entry of approximately 119.16, we could have potentially seen possibly 50 or even 80 psychological level. But one of the things that I use as potential targets in a situation like this are Fibonacci retracements. So if we were to draw, let's say, with the first level down here, we can see where the 382 is, and then if we go with the overall low from that high, we've got a 382 back up here at approximately 40, and then we've got a 50% retracement back up here at approximately 57. So using some of these psychological levels would not be a bad idea in a situation like this. So right now at this moment, we traded this back up, and then we sat through the retracement, and we traded it with just maybe about 7 or 8 pips profit, and then I got out of the trade because it started to move sideways. And I wanted to more or less assess the way the market closed for today during that rollover period. Now I'm looking for the possibility of price closing above this resistance point and then maybe continuing up, and that would be confirmation of this bottom here. And that could potentially, I'm not saying to immediately start buying. I need confirmation. I need a breakout here of this range that you see. But if that happens, that means that potentially this could be the low for the week, and then maybe price would sort of trend to the upside, remaining inside of this overall consolidation. Again, not really affecting the consolidation that we see on the daily chart, so it would just continue, and Friday could still provide us an opportunity to pick up about 55 pips on a breakout to the upside. That's just one possibility. I don't know that it's going to happen. It's just a possibility. So that was one of the trades that we executed here. No loss, but a very small profit on that one. The other trade that I found really reliable, and this was pretty interesting, was the dollar Swiss. Now, we've been trading the dollar Swiss. Here is actually a continuation breakout trade that developed earlier in the week. And I want to draw to your attention that the 55 pip target down here at 91.42, you'll notice how long it actually took for it to hit that target. It took over 24 hours for it to hit that target. But throughout that entire time, the trade has been consistent, and it moved without much of a retracement as far as going against my position, and it eventually hit that target, even though it took a long time. What that tells me is that there's less participation, and markets are moving very slow and very sideways, or in a lot of consolidation. Over the past couple of weeks, we've seen, and I'm sure you know exactly what I'm talking about, a lot of choppy, sloppy price action. A lot of people reporting that they're getting stopped out, both going long and short. Short-term trades, there's not a lot of commitment. You see moves that might move up or down maybe for an hour or two, and then they immediately close those positions and everything starts to reverse. And that's the type of choppy, sloppy price action or trading environment we've got to be really careful with. And it doesn't surprise me, because if we look at the larger time frames for the pound dollar and the euro dollar, we see price reaching, resistance a couple of weeks ago, possible support here on the on the dollar yen, which is the chart I just showed you, and then still remaining inside a consolidation and really not providing any clarity on the larger time frames. So again, looking at some of these currencies and then noticing how long they actually take to reach those targets, it really does confirm the type of trading environment we're actually working in. There was actually another continuation breakout trade the week before last, and it took about 24 hours for it to reach the final target of 55 pips. Remember, on the continuation breakout trades, we earned 55 pips using a 55 pip stop. On the HL30, which is a bounce off of support or resistance, the previous day's high or low, that's a 20 pip target and a 20 pip stop loss. They're two different type of trades, two different type of stop loss and profit targets. So here, this was a T2 pattern. Again, W bottom pattern, noticing that there's a lot of divergence, waiting for a reversal candle. We did this with the trade copier. Our entry was at 91.03 and we closed at approximately 91.50. Good moving trade. This one actually moved more predictably and more consistently, or I should say more fluid. Just the movement on this one was a lot easier to manage than some of the other currencies that we've been trading over the past 24 hours. Not to say that the other ones didn't reach their targets. Ultimately, they will reach their targets. But again, they're just this one was a lot more consistent. And I know that a lot of people over the past few months are sort of afraid to trade the dollar Swiss because of what the Swiss National Bank did a few months ago. And I personally stopped trading the dollar Swiss for a little while, but I have been trading it, and it's been working out perfectly on every single one of my trades. Every time I execute a trade according to the system that I'm using, it's working out extremely well. And it's not likely that the Swiss currency is going to react the way it did a few months ago. We're not likely to see that for quite some time. If a reaction like that happens, it's going to happen everywhere in the market, and it's not going to be necessarily because of the Swiss National Bank. It's going to be something that may happen impact on the dollar, some kind of external event that may have some kind of bomb scare or terrorist threat or something to that effect. I'm just kind of throwing out a few examples out there, but I really don't anticipate any trouble from the Swiss National Bank over the next few months. So I think it's pretty safe to trade this one when we get some of these solid signals. So again, it was another positive, great trading day. So far, we're positive this week, and good luck trading tomorrow. Be very careful. Again, I'm still looking for the possibility of watching for support here on the dollar yen, and then perhaps trading it back up. And then also here with the euro dollar, we've got this range of consolidation here. I'm waiting for a breakout of this range of consolidation. If price closes below this support level here at 1.1340 approximately, it may provide a good opportunity for us to trade a continuation breakout trade to the downside, earning approximately 55 pips using a 55 pip stop loss. Remember, the 55 pip stop loss, that's the largest stop loss that I use. There are other trades that I do execute where I'm only using a 20 pip stop loss, but the largest stop loss I ever use is 55 pips. If you like this video and you want to get more information about these trading strategies, please click the subscribe button so that you can get instant notification when I put up a brand new video tutorial. Or you can visit my website right now by clicking the Visit My Website button, and I have some free trading manuals for you and extra video lessons with some special discount offers to use my Forex Signal service that will automatically execute all of these trades for you onto your MT4 account.